Property prices crash by up to 25%. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee that I'm working through and frankly using to keep me warm in cold Queensland at the moment. I thought we'd go through this article from realestate.com.au because it discusses something very interesting. It looks at property prices in different regions of Australia and different suburbs, because you could be forgiven for thinking that property only ever goes up, that if you go to auction, it's always going to be above reserve, because article after article seems to be saying the same thing. Young couple buy a house for $500,000 above reserve. $4 million mansion sells for hundreds of thousands above reserve. Family are bidding against each other and are above reserve. It always is the cherry-picked examples, or the upper quartile. Remember, the median in Sydney is about 900 grand. It goes down from there. And we're reading articles about $1, $2 to $4 million. It's not the average punter, everyone. It's not the average punter. And we can see here on this chart, which I bring up every now and then, just showing the differences in unit price growth around Sydney. So you can see, well, all things are not created equal, and certainly not property. Location has a big part to play. So I thought it'd be interesting to go through this so we could look at the differences in property prices across Australia's regions and suburbs, and particularly some of them where they've fallen already up to 25%. And then you can just imagine, well, the issue of being in negative equity there. So let's have a look at this. How is the pandemic impacting property prices across Australia's regions and suburbs? And let me know in the comments, before I go any further, which part of Australia do you think has impacted the worst? Let's just play a game here and see how many of you get it right, because, well, I don't think regular viewers are going to be surprised at all. It's kind of sad. As the nation continues to grapple with the pandemic crisis, experts believe the Australian property market is yet to see the full impact of the virus on property prices. 100%. 100%. Because, think about it. We still have mortgage holidays, everyone. Everyone's been given a holiday on their mortgage. We still have interest rates at insanely low levels. I was talking to an engineer yesterday, and he was saying back in the 80s, in the last recession, the 80s to 90s, interest rates skyrocketed. He had, 14% they were paying. They managed to hold on to the place. There's going to be a whole lot of people that don't have any idea. But don't worry, our governor's going to keep the interest rate low for the foreseeable future. But people are still in trouble now meeting their repayments. They're having to get mortgage holidays when our cash rate is just embarrassingly low. 0.25%. I'd update the graph, but it's just going to be a straight line across. I should do that. People are already struggling. You've got JobKeeper propping up so many businesses, so many zombie companies, sadly. You've got tourism completely decimated. You've got construction in trouble. You've got a job seeker bonus that's due to run out, although they're looking not to. So, and the biggest one, the most worrying one, is the ability to trade while insolvent. All those rules have changed. And that disappears in September too. So, I think the fact that we haven't seen the full impact, I would agree with that. I would agree with that. You don't need to be a bloody expert to believe that. That's the thing. You just need to think about this stuff a little bit more and have a bit of common sense. Maybe that doesn't exist anymore. So an analysis of property prices in the first 5 months of 2020 suggests apartments and more affordable regions have so far borne the brunt of the economic downturn, while experts point to surprising resilience in inner city, capital city markets. So it's apartment investors and the poorer regions that are going to cop it. That's the way it always is, isn't it? People who can afford more expensive real estate have probably not experienced the same impact as others from the pandemic, said realestate.com.au's Director of Economic Research, Cameron Cusher. Everyone has lost jobs, but the biggest job losses have been among people under 30. So typically, someone under 30 is not going to be able to spend a couple of $1 million on a home. And even if people with these high-priced properties lose their jobs, there are still people who can afford to buy that property if it has to be sold, he said. So here we're seeing, Frank, it looks like, based on this initial data, and we'll jump over here to the web view so we can see, interact with this. Based on this initial data, there's a generational gap between the impact of this economic decline. So we can see here, let's have a look at houses. We can see in Northern Territory, you've got negative 4.3. We've got in Western Australia, Outback South, negative 3.7. And you've got Perth Northwest, 2.9. You're going to see Western Australia. Notice how it's all clumped down here. Tasmania, Southeast Tassie, still up 16.8% since the beginning of this year. The stellar performer is Sydney Ride, up 23.3, and that's median price, sale price of 1.7. And here in the 2.7 median price, that's 17% in Sydney. So Sydney is all the way up here. Even Melbourne's doing well. Where's Brisbane? Which one's Queensland? We're with that light grey. I mean, there you go. Inner city is up 10.2%, and that's a median price of 1 million. And what I will do is we'll bring up the property data room so we can just compare these prices, these median prices, to, well, what the median for the different states is. So we'll click here. I really should hard code this into my stream deck, but we'll get there. We'll get there one day, bit by bit. So let's look at the median residential units. Oh, well, we'll do houses because we're doing that. As I said, wait, that's rent. House value. As I said, Sydney is at 920. The weighted average is at 660. Good old Brisbane. Our median is at 540, and Melbourne is at 722. So we can see here, look at these guys. This is well above median, well above median, well above median, well above median, all of these ones. So the median for Sydney is here. Okay? So everyone above is doing well. That's probably closest to what we have, 950. And they're still up 13%. But everyone down below here is doing worse. Brisbane, what's our median? About 540. So we're sitting here. So it's kind of split between what's doing better. Brisbane North, come on. Where's Gold Coast? Gold Coast is up 2.7, 1.5. In the city. There we go. Moreton Bay South, 4.2%. So 526,000. So that's houses. Now let's jump over here and we'll look at units, everyone. We'll look at units. Now the median for Sydney is 700 grand for a unit. Weighted average is 569. And we'll just look at Port Perth there, 370. And if we go over here to units, we can see a drastic change in the chart. We'll jump back and forth. I love these interactive charts. Have a look here. Western Australia, Outback North, 25% year-on-year change. 25.6% down to 145,000. Here you have it. Ipswich in Queensland, out of the switch. Unit price, 250 grand, an 18% change. And Ipswich is not that far from Brisbane. You could commute from the switch. You could. But economically, Ipswich is doing pretty bad, everyone, and not just because of the council. You can see here. And let's look at the upper end. You've got 1.1 million in Sydney. The median in Sydney is 700 grand. So this is, again, well above the median, is doing 15%. Here, 16.5, 9.6. So we can see here, guys, combining these two data sets, it clearly demonstrates that the people who have the more valuable property are not experiencing the hit as much as the people in the poorer property. Look at Perth, Outback South, down, down, down. So investing in units in Perth probably has not been the smartest decision that people have made, at least based on these results. Houses, well, houses are houses. And I wonder if this hit in just Perth, in units in general, has got a lot to do with the declining consumer confidence in units because of all of the issues that have happened with construction lately. So, property markets in regions outside of capital cities where economies and probably economists heavily depend on the tourism industry have weakened, while property types popular with investors, such as units in Greater Brisbane, have also declined. And here we have as well, and we'll jump back here. We can pick the suburb. Guys, we can pick the suburb. So Richmond, let's look at Toorak. Oh, is it working? Oh, great, I got it. Well, I'll let you go through this on your own, everyone, because it's going to be... You can choose the suburb, you can see the median unit price and the median house price. We can see where it is here. I'll let you go through that on your own to get a appreciation of what's happening. And you can see the change over 12 months. So, however, the trend is slightly murkier on a suburb level, where 12 months of data is typically required to generate enough sales to show year-on-year change. In fact, over the past 12 months, many suburbs are still showing strong growth, which may be driven by amenities like schools and other lifestyle factors, or even the types of houses and units that are changing hands. I know here, Brisbane, if you can get, well, if you're in the catchment for a Brisbane State High, it increases the value of all of the properties in that suburb. It's one of the best, well, the best public high school in the state. People want to go there. If you're looking at the suburbs where prices have risen the most over the past 12 months, particularly in Melbourne and Sydney, you're seeing mid to top end suburbs with quite strong growth, but then equally there are other suburbs at the high end of the market that are also seeing price falls, Mr. Gusher said. Because turnover has fallen so sharply as lockdowns occurred and prices are a lagging indicator, it is impossible to tell quite yet the impact of the pandemic on property prices. Exactly. That's why I've been stumped. Why people are rushing. Is it the FOMO? Are people experiencing FOMO? When all these things are going to come to a head in a few months' time, do people just not want to wait a little bit longer? Or are they that secure in their employment? Or is it the $25,000 home buyer or home builder grant that's encouraging people to take the jump? That article we read about that guy who bought a $440,000 off the plan apartment. It just seems insane with everything that's happened why anyone would jump into an off-the-plan apartment right now. It does not make any sense. Have you not been following the news stuff? If we look at current indicators such as search, of course, and demand, we see it has rebounded swiftly, showing that any price falls that occur are unlikely, at least initially, to be substantial. So top of the pack, suburbs where prices have grown. Over the past 12 months, the outer Melbourne suburbs of Chab recorded the strongest year-on-year price growth in the country, surging 54% to a median of $900,000. Bloody hell, 54%? That's crazy. Like all suburbs that were undervalued on the state's Mornington Peninsula, Chab is now starting to see a lift because people are moving to these locations for lifestyle, said director of McEwing and Partners. There are still properties you can buy on smaller parcels of land close to the little village, which in all reality doesn't offer a huge amount of lifestyle, but is very close to more desirable areas such as Mornington Peninsula, he said. He added, most of the recent sales in the town have been at the higher end of the market, which could have contributed to the jump in the median 12 months to May of 2020. That's the thing. It's the latest sales. It's the edge cases. We still have mortgage holidays, everyone. People haven't been forced to sell. How many of these places, in the Mornington Peninsula, just think about it. How many of them, once the mortgage holiday disappears for all the people that have their Airbnbs, they can't get anyone renting it. They've taken the furniture out, put it on the long-term market. They can't get anyone in. How many people are going to be pushed into forced sales? That's the question. Maybe the government will give a Airbnb grant to, prop up the boomer tourism sector even more. Oh, I shouldn't have said it. It's going to happen now. 6 of the top 10 suburbs for housing price growth in the past 12 months were in Sydney, with 3 located in the city's hip inner west. Exactly. Persham came in at number 2 with house price growth of 33% to a median just shy of 1.7. Heberfield rolled in at number 7 with growth of 25% to a median of almost 2.2, while trendy Erkinsville took out 8 spots with 25% growth to a median of just 1.5 million. In Brisbane, the high-end suburb of Fig Tree Pocket ranked at number 3 for house price growth in the past 12 months, with an increase of 31% to a median of more than 1.16. The suburb of Grange came in at number 4 with a median jump of 29% to 1.16 again. But here's the thing. You need to find someone to buy it. Are people going to jump in and buy now, or are they going to wait? Maybe they're going to jump in. And as we can see here, it's the edge cases. It's the edge cases that are affecting the price valuations. So once people are forced to sell, once the edge cases start to hit the market, that's going to change. Compare the top 5 suburbs for growth in Melbourne and Sydney. There's a clear trend towards middle ring and inner city living. People are paying a premium to be close to the city in Sydney, but the inner west, for example, offers a much cheaper buy-in price than going to the eastern suburbs or North Shore, he said. In Melbourne, it's not really the blue chip areas we're seeing in the top 5. It's kind of middle ring suburbs like Box Hill South and Chadstone. It's not the ultra top end of the market, but it's still the above average price suburbs that are seeing the strongest growth. There was a similar outer suburb growth trend for unit prices in Melbourne, with the suburbs of Nunawading in Melbourne's east recording the strongest unit price growth in the country, with an increase of 54% to a median price of $738,000. I mean, have a look at what we've been looking at, guys. It's not universal. In a similar vein to house prices, 5 of the top 10 suburbs for unit price growth were in Sydney, including the inner city suburbs of Bronte, at number 2 with growth of 35% to a median unit price of more than $1.2 million, while Concord was at number 3 with unit price growth of 34% to a median of $995. So let's look at the suburbs that are leading the decline. As Mr. Kusher suggested, while many of the suburbs are experiencing growth in the past 12 months, were high-end property markets, similar suburbs were not immune to price drops. While looking at suburbs where house price declines the most in the past year, the popular suburb of Carlton in Melbourne's inner north surprisingly ranked at number 1 with a 24% dip to the median. It's now sitting at 997,000. So we've got here 997. There you go. Brisbane, Balmoral is down 20%. Oh, my mate who lives out there will be unhappy, $800,000. And it's a nice suburb. Sure, it's kind of difficult to get in and out, but meanwhile, the exclusive suburb of Dover Heights in Sydney's east came in at number 3 on the list with a drop of 19% to 3.5. 3 of the top 10 suburbs where house prices fell were in Perth, including Mount Helena at number 5 of 19% to the median of 442, Golden Bay with a decline of 18% to 318, and Shelley at number 8 with also an 18% drop, but a much higher median at 920. For units, West Melbourne suburb of Albion experienced the biggest fall from 12 months of sales with a drop of 42% with a new median of 275. By contrast, Sydney's Darling Point, the median unit price dropped 26% to just over $1.7 million. Nearby in Elizabeth Bay, the median unit price dropped or dipped 22% to $858,000. So a closer look at property price behavior by region in 2020. Given the pandemic only took hold in mid-March this year, the 12-month snapshot of property prices at a suburb level only tells part of the story. Carving up Australia by large regions allows us to compare the first 5 months of 2020 to the same period of last year. And we can see here, everything is still shooting up, and we've got falls of 4% down to 0, and all these growths. But we've just seen the beginning of this hit. 9 of the 10 regions where house prices grew the most were in Sydney and Ryde, taking out top spots with 23.3% growth to a median of 1.7. Southeast Tasmania was the only region outside of Sydney to make the top 10 list, coming in at number 6 with growth of 16.8% to a median of 420,000. Well, there you go. Tasmania is in the league of Sydney with property price growth. Who would have thought? I mean, we've been reading more and more about Tasmania shooting up. I remember I worked with a Tassie firm, their Brisbane office, and I'd go down there and I'd be quite annoyed because the Tasmanian guys were paid the same as us in Brisbane. And houses were so much cheaper there. They could get stuff for under $200,000. Mortgages that were nothing. So, for units, the region that saw price growth were more varied. But again, New South Wales regions dominated the list with 5 regions showing unit price growth in the first half of the year. Tasmania's Launceston and North East region took our top spot for unit price growth with an increase of 17% to a median of 297,000. Unit price growth in Launceston was likely reflective of people being priced out of Hobart, he said. The majority, well, we'll have to see. We'll have to see. International student numbers are going to take a hit, so Lonnie and Hobart will have some units available. The majority of the top 10 regions for unit price declines were mostly outer suburbs and regional areas where apartment supply is more limited. In terms of regions that experienced house price falls, the Darwin region took out number one spot, with house prices down 4.3%. Perth and some of the outer areas of Brisbane also came through on the list. Oh, good old Brisbane. Where are we here? Okay, Logan, Ipswich. Yeah, well, Logan and Ipswich. I'm not surprised they're going to take a hit, but they'll be more affordable. I mean, Logan is, it's a lower socioeconomic city, but it's still very convenient. You're close to Brisbane, you're close to the Gold Coast. It's not that far. It's got some advantages. It really has. And there's some nice areas down there. Western Australia, Northern Territory and Queensland have definitely lagged behind the rest of the country in recent years, so it's as you'd expect. Mr. Kusher said the regional median house price figures for the first half of the year indicated that higher priced markets have generally seen stronger growth and lower priced areas during the pandemic. However, given we're only 3 months into the health crisis and economic crisis in Australia, he added, Australians are going to have to wait a little longer to see the true impact of the pandemic on property prices. So where to now for property prices? The property market appears to be holding fairly steady for now, despite some economists predicting that property prices would drop 10 to 20% as a result of the pandemic. Well, yes, because of everything we've just read, that we're not seeing the true impact of it. Okay. However, Professor Sean Bond of the University of Queensland School of Business pointed out that many of the predictions made during the shutdown period were largely based on worst-case scenarios. I would certainly not put too much thought onto the extreme negative numbers that we've mentioned earlier on, he warned. Even so, Professor Bond said the housing market was not immune to a general economic downturn. We're seeing record unemployment and large number of job losses, he said. Going forward, so much depends on what happens to the economy and how quickly we move out of lockdown. And that's the thing. I mean, look at Victoria, everyone. Professor Bond noted that some parts of the market are being more negatively impacted than others. We're seeing pretty big reductions in rent and increases in rental vacancies in some areas due to job losses, a big downturn in foreign students and a big drop-off in migration. We're looking at those things not getting back to normal until maybe next year or the year after. So there's probably going to lead to some financial distress for landlords who could be forced to sell. That's when we start seeing the real impact of this. It's all artificially and propped up. If the number of rental vacancies continues to increase, some of those inner city areas and maybe some of the further out developments could see price falls. So a lot will depend on the extent to which banks are willing to work with these landlords. If there's a second wave of virus and we're forced to wind back some of the easing of restrictions, that would obviously be bad for the economy. On the other hand, if we come up with medical treatments or a vaccine sooner than expected, and that leads to the economy starting to move again, that would be a very positive for house prices. So I'm starting to see this more and more. They're basing it all on hope. They're basing it all on hope. Because even if they develop a successful treatment for it, you'll get a genetic mutation that is more likely to occur because of just the spread of it. It's, that the risk of seasonal impacts is something that needs to be considered. So it needs to be improved medical treatment and just management and people managing their own risk, I would argue. We'll have to see. So what do you think, everyone? It looks like we're not seeing equality in property price hits. How's your suburb doing? Are you happy with it? Has it grown? Has it taken a big hit? Do you not believe the valuations that you're getting? Literally, I don't believe the valuation from my bank that whenever I log into my CommBank and see, I think it's utter BS because there's a property across the street they're trying to sell. They're trying to sell it right now for what they bought it for, and they're getting no buyers. Could be that they've got there was a development opportunity, but they didn't realize there was an easement running along the back of it. So we'll have to see, everyone. Let me know your thoughts and opinions in the comments below. Or are you rushing out to buy that unit off the plan? Do you think property is going to take a hit? Or will we see the impact later in the year? Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can interact with the channel, comment, like, share the videos. It helps us grow. You can support us via via using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can use Gold Pass from the Per the Mint or support us via PayPal. Thanks, everyone. Have a great day. I'll see you next time.